Everybody, before I get into this morning's update, I want to go over a quick overview of what's transpiring this morning. First, as we know, XRP's taking a little bit of a dive. We're at about the 0.5078 level. 1 billion XRP was released from Escrow today, as it happens on the first of the month every single month. So we knew it was going to be bearish to start the day. We had a bearish hammer to end the daily yesterday, which showed, yes, the buyers were able to absorb the sellers, but they were not able to bring us out of the range for a new high, which told us we were going to be bearish to start today. And with that, in relation with the 1 billion XRP release from Ripple's Escrow, that told us we were going to have a bearish bias today. However, the thing that gets lost on a lot of people, we're all here. The reason you come and watch, the reason why we all have an active discussion amongst each other, and why this community is growing so quickly is because we all have an overwhelming love for XRP. Yes, we like other ISO tokens and Internet of Things. We like XDC and XLM, but XRP is the main attraction. I believe we all found each other over XRP, and I think we have to keep our minds focused and emotionless that it's more than just the price action today. So we're accumulating, we're positioning ourselves, but our ultimate journey doesn't even start until 2025 through the 2025 to 2028 end time, when we have the final bank and or financial institution using the old HTML framework from Swift and switching over to the ISO compliant. So that's what we're looking at here. We'll take a look at the technical analysis to look exactly what's going to happen in the immediate short term. We'll take a look on the all-time pattern to see exactly where we're trending towards, and see if we're going to break our way down to the 2020 uptrend, or if we have some support in between. And then we'll also take a look at the DXY, as we have the Fed releasing a few things today, so we'll keep up on that later on today. So please make sure you hit that like button, as it greatly helps push me through the analytics. Make sure that you share this as well, as the more we share this, the more we get this pushed around, the more active communication we can have in the comments. And as always, I thank each and every one of you for being here, because without you, I wouldn't be here. There wouldn't be nobody to talk to. And just remember one small message. We are the light surrounded by a world full of darkness, so we have to be the winners. We can't play the victim. We have to have positivity over negativity. We have to be inclusive. We can't be divided. I'll catch you after the intro. Good morning, 9:18 a.m. Eastern Standard Time on this Friday, September 1st, 2023. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So as we can see with the US dollar currency index, real quickly, it's at 103 spot. It's bouncing around 41 right now. We've fallen outside of that rising channel, and as we talked about yesterday, are we going to come back within it, or is this the end of it? Well, the early signals right now, we're trying to confirm this golden cross, which has actually happened now. After the close yesterday, as we talked about, it would finally be confirmed that it would cross. So now it's, are we going to continue up, or are we going to get rejected by this falling channel? Well, the first things that's showing up here is a long leg doji. This suggests that after this breakdown that we were indecisive and we might have another layer up. That can't be decided until you first get back into this falling channel at 103 spot 71, ultimately getting over that 103 spot 666. So that's what we're looking at for the rest of the day. So yes, it looks a little bearish right now, but it's going to be up to the pattern formation. If we can get back within here, we do have a long leg doji, which suggests we could still have a little bit of hope here. Small inverted head and shoulders that could push you back in here. So we're going to see if we get rejected in this area and the US dollar continues to push down to 102 spot 60, or if we get back on top of the falling channel and then ultimately push up to that 105 spot 30 area. Just by getting back into the falling channel, your next resistance would end up being all the way up here anyhow. So that's how you would get up there, but you'd have to get back within the falling channel. For anybody who likes my slightly longer updates this morning, this is going to be a rather lengthy update compared to my 9 or 10 normal minutes, because we have a lot to talk about. So make sure you hit that like button so we can get more people in here to have an active discussion. This was our playbook yesterday out of XRP. we said even if we came up here to peek ahead that we were going to get chopped back down and rejected down to the uptrend, and we're progressing in that way. We thought with the escrow, the reality was we were going to come down here at minimum to retest this 50 cent area, the 497. So anybody who was in the live last night, it was rather fun. It was rather fun. Got about 1,000 views in the live. Not as many people are tuning into XRP in general because we're on a downturn, but it makes it even funner for me to see who actually sticks around. And there was 135 people in the live, which actually surprised me. So there's a lot of people paying attention, doing their due diligence, and trying to stay ahead of the chart. Right now, what continues to happen 2 hourly, yes, it was bearish on the way down. We had a long leg doji to reverse, but now we put in a gravestone. It's showing us we're still very bearish. A lot of the selling pressure, even though we were able to push over, most of the sellers were down here. So that is still a bearish formation. In the 4 hourly, XRP long leg doji, so we could reverse back and now try to hit this upper resistance. But it all depends here because it isn't looking very strength. There's not a lot of strength here overall. The only good thing is we came down to this uptrending support and we were able to hold it around that 498. And we haven't revisited it yet, but this Deathcross looming. We have a looming Deathcross here in the daily time frame. The fact we came up on resistance and we failed to break past, as you can see, we were telegraphing this the whole time. We had to have one more hit up here, which we came and hit. We just were unable to push through and try to even test with the 200 and the 4 hour time frame. We got rejected at the 100, so we couldn't even come up there to try to reverse the pattern. And now this is looking pretty bearish overall. Yes, in the 4 hourly there's a long leg doji that should bring us back up probably to retest this drop point at some point. It seems to be counterintuitive not to come back up here and retest this area one last time if we're bearish. So, but could you anticipate a move up to 519? It's possible, but you would have to break the 2 hour time frame at 51 cents, which is becoming ultimately bearish right now. With the escrow dump, it leaves a lot of pressure on us. With whales pulling out as well, it leaves a lot of pressure. Don't listen to some of the storylines this morning that XRP sold 1 billion XRP, or Ripple released 1 billion XRP because of uncertainty with the SEC. I've seen the headlines. It's completely fabricated. This is something that's been voted on since 2017. It was supposed to be 55 consecutive months of 1 billion, but because they put back at times 50 to 75% back in escrow, you can take that 55 months and turn it into 110, like I said before. If it was supposed to be exhausted like it was supposed to, it should have been early to mid 2022. I think it's going to take us into 2026, 2027 area with these billion escrow dumps, and then they put back most of it. So that's what I'm looking at. As far as this pattern formation in the immediate short term, if we want to get a little positivity here and we want to start breaking back out, you got to start to reverse this pattern formation. And unfortunately, you're not going to get a lot of strength early morning here with that escrow dump. In fact, this should be a bearish proposition because it is the first of the month. Now, I always say when you come towards the end of the week, you can change things, but that's a all but forgot or begone or concluded bear flag right here. So if we get rejected or and break down, we know a technical target on the breakdown. We can measure it out as small, just the initial target, and this will give you an idea of where we're coming and then where we have to go after. So let's just say we reject here, and that's where we get the rejection. You can either go from there, and that'll get you into the demand zone at 477, or you can take the breakdown on this pattern formation, the longer term, and then it would initially get you down to about 47 cents. But as it is, that first layer it can get you down to on the breakdown at that 477 approximately. That's the demand zone, around 48 cents. So that could stop you and then push you back up. But with the way it looks, that's the short-term chart. Let's go into the long-term chart. This is the current formation drawn out. So this is your actual pattern formation. I drew in the short-term narrative. As we know, this is your short-term at play. So until we break this, we won't come down to the next layer at about 37.5 cents in the all-time pattern. This is taking out all the noise and showing you just the all-time pattern. And if you break this out, it is the all-time pattern. You can bring this all the way back. I'm not going to lower it at all, but you can bring this back to 2013. Then you've got the 2017 uptrend right here that starts back in here. Then you got the 2020 uptrend, which we're dealing with right now on a breakdown. So if we were to break down, you'd have to break this formation, which means that your uptrending support right now is that 498, as we talked about. The downtrending resistance is 55 cents though. So technically, you could still come back up there if you don't break the formation and still be very bearish. So don't let the optics fool you. Pay attention to all the information this morning, as that is what's going on. That to a T is exactly what's going on in the price action. So we know we're more bearish than bullish. We know if we break down, we've got multiple levels, and it's going to be a lot harder to break up and out right now, especially with the 1 billion coming on from Escrow. But we'll talk about Escrow later. I just want to pay attention to just the price action in this update. And yes, I know it's already been 10 minutes, but it's a very, very important update. Make sure you hit that like button if you got anything out of this. Make sure you subscribe to the channel if you want to see anything more, and join the over 18,300 subscribers. If you're looking to trade XRP or your favorite crypto, video description below and or pinned comments. I've got the links for FEMX, lowest maker fee in the USA. If you're using a credit card to deposit, yes, you're going to have to use a KYC because they want to know who you are. If you're going to use money out of a bank account or credit card, if you're doing it from exchange to exchange, you don't need to do a KYC. You can do the on and off ramping to other exchanges up to $10,000 per day, dollars per day. But their spot maker fee for credit cards is only 0.5%. So like on my credit card, I get 1 to 2% minimum on cashback. Might as well use your credit card, pay for that spot maker fee, and get a little bit back in return. That's one of the reasons I really like FEMX. So that's all in the video description below and or pinned comment. If you want to join Tom's Army, that would be greatly appreciated, as I do no paid advertising, promotions, or sponsorships of any kind. And I don't charge anything, so everything's free for my content, so please pay it forward. It's in our best interest to pay it forward. It's the right thing to do, and you're supposed to show appreciation for someone's time put in. So if I've given you the proper education, please don't hesitate to show me some support. Hell, you can send me a YouTube super chat. I just don't advise it. But make sure you hit that like button. XRP again, before I leave. Uptrending support here in the immediate short term, 497, 498 range. We'll say 497. You break that, and in the all-time chart, your next real support is down at the 2020 uptrend around 37.8 cents. If you're trying to avoid coming down to the 2020 uptrend at an immediate breakdown, we do have a short-term pattern formation here. Once you break this, you've got the underneath support at about 50 cents. We know the 497 with the all-time pattern, but once you break down here, there's not much holding us. The next major support before getting down to the 2020 uptrend is this rising channel that we've created with XRP, which is bearish on the onset. You have to get above it and hold to not have this bearish reversal happen on the bottom with the continuation, I should say. But when you come down here, you've got support on the channel at about 446, and then you've got the swing low at 435. If you break that, you've got nothing else until the 2020 uptrend at 37.8 cents. I'm XRP Future Millionaire. I appreciate each and every one of you. Make sure you hit that like button this morning, and make sure you pay attention to the trend. The last thing I want to show you is Bitcoin. Just over 26,000. We're up about 90 points. Bitcoin still has not fulfilled the technical target that I've talked about. We'll see if it continues down to 25,193. We came awfully close, but the target on the rejection at 27,696 is back down to 25,371. The technical target on the breakdown initially was 25,193. So we're working our way back down there and then some, because that's a pretty big bear flag with a small bull flag at the end. So we are showing a long leg doji here, which means we could retest this break point. But this is going to be very, very ominous here today. So we need to break past very key levels for Bitcoin. First things first, 26,193 back above. And then you've got to break back over here where we're getting this cross here in the 4-hourly. You got no choice but to get back above 26,550. And then in the daily time frame, it's looking very bearish. You have a Deathcross. You were rejected in the daily. This looks like we're going to come down even farther. And if we break these levels of support, your next area of support is down at 23,740. And that is what could be constituted. And it might be turning into a doomsday scenario here. If you break that, you'd be coming down to the CME gap around 21,900, and that would be a nightmare. So pay attention to Bitcoin, pay attention to XRP, but most importantly as well, pay attention to the DXY. We got the Fed coming out today, which we can go over real quick. It's the Fed report. So the jobs report takes pressure off of Fed. So former Federal Reserve Governor Randall Kuczynski expects the Fed to hold on rates for the rest of the year. In the wake of August U.S. employment report, he speaks with time. So basically, the numbers are coming in. Okay, everybody, so this is the update on the U.S. August payrolls. It increased 187, estimate 170. So they're trying to soften this a little bit so they can have a softer landing here come the next rate hikes. Maybe they'll stand pat. Maybe we'll go off, or we'll see, though. But this is exactly what happened. So I want to end this. with the jobs report, and I'll let you listen to this as it's breaking news.
Professor Krasner, can you glean here a Fed that will change its attitude towards the November meeting?
So I think, as we were talking about before, this is kind of, roughly what the Fed was expecting. We've seen a little bit less wage pressure, which is good from the Fed's perspective. We've seen greater labor force participation, which the Fed also likes. That's likely what is accounting for the increase in the unemployment rate. So you're seeing the kind of Goldilocks scenario that the Fed wants, that the labor market is gradually softening, but not cratering. It's taking some of the pressure off, and so that'll take the pressure off the Fed from raising rates. I think it'd be really unlikely that they're going to move in at the next meeting, and obviously there's going to be a lot more data that'll come out between now and then, but unless there's some major surprise, they're probably likely going to hold through the rest of the year.
Randy, we've got to run, but one more quick question, if I may. It's a dual mandate. Is it really a dual mandate for this Federal Reserve System?
Well, this is the big pivot that came last year at Jackson Hole when Jay Powell said, there's one thing that we're going to do, and he said it 8 times, that we're going to fight inflation. So he basically said, sure, we have a dual mandate, but the inflation part is the most important. This year was kind of more back to normal, that we have to worry about both the inflation part as well as the employment part. And so that's why the Fed's looking so carefully at the data to make sure that they don't raise rates so much that they bring the unemployment rate zooming up.
Right.
It's hard to get that perfect. A lot of people think, the Fed can perfectly engineer this soft landing, that they have so much control that they can move the unemployment rate up just 1 or 2 tenths of a percent and leave it there. It's not so easy as that. There are a lot of factors that come in.
Okay, and the 10-year yield, as you've seen, has fallen off a cliff. We talked about that at the start of the weekend. We'd have to watch the U.S. 10-year to see if they're buying up government bonds. You can see the Dow is up 250 points. The DXY is coming down about 0.3%. Crypto is getting a little bit of a bid here, but nothing major. So we'll see how this plays out as the day goes on. There's a lot of stuff to be talking about. There's a lot of news, as you know, with the jobs reports. And that looks like they're trying to give a little bit of pressure, leave a little bit of pressure off here. So let me know in the comments what your opinion is. If you think XRP can fight back, or if overall, like we've been seeing with the XRP price action, it's looking more bearish than bullish. Even with the XRP market cap, we talked about yesterday, if we wanted to try to break back and expand, we needed to get back over this immediate short term and get back over 27.2 billion. We've just been unable to make any kind of real rally. I anticipate a small little correction here back to the top side, but I can't see us making much of a big correction here without any further volume. The escrow dump, as we know, I'll go over it in a little bit. I'll do a separate update. I want to talk about the 1 billion Ripple escrow dump as I piece it together to see exactly where what's going, see how much is actually kept on the public, and see how much is locked back away. Last month, they locked away about 40% of it again. So we'll see what happens. It's a very, very busy day today, but on days like today, I like to stay transparent, and I like to talk through very slowly what I'm thinking. So if a 20-minute update doesn't sit well, it should, because these are the kind of things you need to pay attention to. And I've given you everything this morning between Bitcoin, the DXY, XRP, the jobs report, and also the XRP market cap to see exactly what you need to do to make an educated and informed decision. You don't play the victim here, you play the winner. And with that being said, you have to have all the information on the charts and the news alike to make an educated and informed decision when it comes to the XRP price action and or future movements. But you have to do it from an emotionless response. If you let your emotions dictate your response, you're going to make a bad decision every single time. And don't trust anybody you see on social media. You must make a proper decision. Don't trust anybody, even myself. If it lines up with what I'm saying and to your understanding, we'll obviously take it for what it's worth. But if it's not lining up to you verbatimly, maybe look a little bit deeper on why we're not coming to the same conclusions. And then let me know in the comments what you're thinking about what I've talked about today. In conclusion, we're trying to come up here with the total crypto market cap for the next rejection at 27.1 trillion, or billion, I mean. We can still get rejected at this downtrending resistance line, which we're trying to get back up. This way you can bounce around and create this inside out wedge kind of. But other than that, If you get rejected here, your next major support, and this is a nice little flag here if it breaks down, you'd be coming down to about that 25.17 billion. Stay blessed, everybody. Remember, you are the light in the world surrounded by darkness.